Welcome to readtheticker.com. Today we're going to talk about relative strength management. Now, relative strength is the comparison between a stock and a base symbol. In this particular case here, you'll see that the stock is XLV in black, the base symbol is SPY, and the pink line is the relative strength or the ratio between the black and the red line. Okay, so the dotted blue line is a moving average, 20 periods I think, of the relative strength. That's correct, yes, relative strength. So when the relative strength is trending up, or the pink line is moving above the dotted blue line, that means the black line is stronger than the red line. This means that Mr. Market is chasing the black line higher, or the health sector in this particular case. They're hitting the bids more, they're putting more money into it. That is the favoured sector. And that is strength. That's one of the characteristics that Richard Wyckoff requested before you make a buy decision. Is the sector doing better than the overall market? And relative strength is a tool of choice to determine that. Now, this is the readtheticker.com relative strength chart, but it's okay to measure one relationship between here, the health sector, and SPY. But how do you manage 30, 60, 90, 100 relationships? What we do is we take a measure of the distance between the last point on the pink line and the blue line, and we add up that for 22 periods, and then we get an average. Then we go back every 22 periods. For example, I'm just going to roughly put this in. 22 periods is about an average of a month. So what we do is we go through and say we add up the difference, positive, negative, between the pink line and the blue line. Add that all up, and then you get a summary. Okay, and that'll be the average distance between the blue line and the pink line. And what we do is we take that average of relative strength of this stock and this base symbol, and then we compare it to other symbols. And that ends up going into a table. Just switch back. Here we have that table. Here we have a list of ETF sectors or industry sectors, and we rank it by the average shown of that 22 period. So for example, here this is mostly positive, so this will probably have an average of 2 or 3%, because it's an average of that part there. When you go back to the table, you are able to monitor how an industry is doing comparable to other industries when it's on the same base symbol. And you'll see here I've got rank 0, rank 1, rank 2, rank 3, rank 4, rank 5. Rank 0 is the current average 22 period of the relative strength. This is the previous 22 period, rank 1. Rank 2 is the second previous, third previous, fourth previous. So here you can see how a sector moves up and down in relative strength terms. Now, obviously the red is a change down and the blue is a change up. Now, one of the best ways to use this table is to take into account the poor performing sectors. They normally hobble around the last 5, 6 or 10 area, 5 to 10 rankings of the sector. As you can see down here, this sector, I think this table is about 1 to 30 or 1 to 29. So therefore, the highest ranked ones will be ranked 1, and the lowest ranked one will be 25. So here we have 13. So that means the previous time this XLF was ranked, it was actually down here 13. So it's jumped from 13 to 1, and that's a change of 12 places. Okay, so how do you use this? Well, first thing is to appreciate when a stock has a poor relative strength to a base symbol, in this particular case here, a SPY, and these are industry sectors. They're generally going to bounce up and bounce down and float up and down this area here. Like when they're down here, they're overextended to the low, and they bounce up, they may be a possible short. Okay, and obviously the very strong sectors, they're going to bounce around between here, relative strength, and moving up here. Sector rotation goes on. They're going to be the top, then they're going to swing down to the quarter, then they're going to bounce up again as more money comes in and what have you. What is to pay attention is when a sector goes from the lower range sort of range and bouncing around and jumps into the middle. Okay, that is a change. When it jumps into the middle, that means either from the low end or the upper end, it falls into the middle or jumps into the middle. That means something else is going on. The strength has changed. As we can see here, we've got GDX, Continuous Commodities Index, and GDXJ, Gold Miners Junior, in the middle range. So if they go from here, they normally skip into the middle for a while, and then they might jump to the higher zones or the strongest relative strength. Okay, so if you're keeping an eye on stuff, if you're keeping an eye on sectors that are moving up and down in relative strength, you want to know which ones are changing. You want to know which one's in the middle. That's interesting, because obviously if they were down here, for example, energy, we know that's had a bit of a slump on the crude oil. And you can imagine it's, let's have a look, it was 25, 22, 14, 15, 2, 20, it's back down to 20. So we went to 14, 15, which is about here, and it's fallen back in. So we went from 25, which is the lower sector, which was down here. See 25? It bounced to 22, it bounced around here for a bit. Jumped up to the middle, which is 14. Spent a couple of months, 2 months there. And then now it's fallen down again. So here it was around here, XLE, low, bounced up to here, and now it's fallen back down, see? So therefore the bearishness and the relative strength continues with this table. This is the bearish side, and it moves up and down, and they obviously attract the shorts. And once again, the bullish here. For example, here we've got health. We know how the health sector has been very strong. It's been as low as 12, 13, 6, 12, but it's pretty much been around 2, so that's a pretty good average. I mean, you can see over here I've got an average rank of 11 and 7, so the first 3 periods average 11, so in the last 3 boxes average 7, so it's a very high rank. Okay, so what's the point? The point is this: when stuff gets into the middle, GDXJ, here we have a look over here, previously was averaging 16. So the first 3 boxes were averaging 16, okay? And the second 3 boxes are averaging 10. And these are 22 periods of daily data, so that's 3 months. So the 0, 1 and 2 is 3 months. 3, 4 and 5 is another 3 months. So therefore we can say the last 6 months, GDXJ has moved from a mediocre bearish type relative strength, and it's starting to move in a positive relative strength. The average rank shows the move up or down. And when you're looking at lots and lots of symbols, here's 30 particularly, you want to know if you're bullish or you want to be long, is whether the relative strength is strengthening. Let's have a closer look at GDXJ or the Gold Miners Juniors. Let's open that up. Now I've got my pop-out swing chart, or my alpha chart, set up with a bunch of templates. I'm just going to scroll down to the alpha symbol chart. Okay, here we go here. The red line is SPY, the black line is GDXJ. As you can see here, by the dotted blue line sloping down, the relative strength has been pretty poor. And just recently it's been flattening out the last 2 months as the pink line overcomes the blue line. It just shows that from this period on, that the GDXJ Juniors has been, or has a high correlation with the SPY. Relative strength has zeroed out, and that's why it's in the middle of these sectors. Obviously, what we have to watch for is when the black line starts trending up and outperforming SPY. And as you can see, it's pretty much set up to. We haven't seen, most times we had these little corrections along here, so it's one to watch. For example, here the healthcare, I'll show you healthcare, I think I showed you healthcare before. See how the line is always trending up? Every 22-month period, it's always been strong, so therefore it's always had a high average. The other thing to note here is that you can measure the relative strength over 6 months over many sectors. You can also take into account the rank. For example here, this is the RTT rank based on the price trend of the black line. So whereas the table is based on the relative strength of the ratio between the stock and the base symbol, or in this particular case an index SPY, where this RTT rank is purely based on the performance of the black line or the stock itself. So here you see, as you can see, this one here, the GDXJY, is the best performing relative strength with the worst rank trend. Okay, so that's why you need to take into account. You want to see trend moving up, and obviously down here you've got consumer staples. Consumer staples has the worst relative strength for the best price trend. Okay, so here we have the trend going up, but it's got the worst relative strength. See, it was averaging 11 in relative strength for the first 22 day period, sorry, and it slumped in its last 3 months. So therefore, that is a typical sort of pullback, which means you must consider that for purchasing, or via Wyckoff rules, understanding accumulation and whether the parameters look good for a buy. Just scroll down to my template. Where is it? Oh, too far. Here we are. Here we go. Here, the red line is the SPY. The black line is XLP. And as you can see here, the relative strength is slumped the last 3 months. That's because the risk factor stocks, that's technology, industrials, consumer, discretionary, have all held the sector up, and XLP's just gone sideways, just out of favour. So when risk off next appears, the black line will start trending up as it did here. The point about it is, if you were looking for a sector to gain, XLP is one to be considered, because the long-term trend is up, and it's just having a bit of a relative strength slump. And as you can see, so it's still only going horizontal, it hasn't actually fallen. So this particular table here of 30 stocks or 30 sectors I've here allows you to keep a track of when and how fast relative strength is shifting within the array of sectors. The other good thing about our alpha or relative strength management is that you can manage up to 20 tables. So I've got one for industry. I've got one for, here's 9. I've got one for transports. This is Dow Transports. You might load one up for favoured technology stocks or favoured gold stocks. You might load stuff up for dividend stocks. You might load up for one for selling option premium stocks. Here I've loaded the Dow Transports, and our first page load, the settings are in here. We have the ability to load your sectors. In the readtheticker.com, we load the symbol first, the double colon, and the index, and that means the ratio of DAL to TRAN. Okay, and you can change some parameters down here to make things look nice or pretty or whatever. Okay, so we scroll down the relative strength page. We've just got a price movement every day, every week, every month, 6 months. And we have a scatter diagram, and once again, we have the table here, and I can consider or look for very quickly which stocks are winning in the relative strength battle within the transport sector. And here I can see, yes, RTT rank that FedEx is the star, so I want to keep an eye on that. Slump, once again, it's got 10 and 6. So here we've got a maximum of 18. So 10 minutes slumped down to here. So that's sort of like halfway slumped and a bounce back. So that's the bullish part. And that'll be the bearish part. So the bearish relative strength stocks will fluctuate up and down like that. Okay, my worst performing, best trending stock is this one here, 72. It's got an RTT rank of 72. And it's had pretty good relative strength, 3 and 5. That's obviously a top leader. But something's happened to JBL in the recent times. Obviously it must have tanked because it's had a massive move down. Let's have a look at that. Maybe they had bad earnings or something. Okay, so strong trend like that, having a massive slump in relative strength. I would watch that. I'll put that on my list to watch. Yes, we've had a bit of a slump down here like that. I will watch for the selling to dry up. I would watch for Richard Wyckoff technical strength to come in. And once again, the previous video said is that once the selling, the weekends have given up, the shorts have built up a position, and you see accumulation building up, you know that the selling and supply has dried up and then demand will come back in. So I roll down to my relative strength chart. Yes, here we go. And that's why we have it's poor performing, because we have this big slump down here. Hang on. And probably for the last 22 periods it's been quite poor. Which is only normal in a price that's risen so hard. Sorry, in a stock that's risen so hard. Bit of selling comes in, and as you can see, the stepping formation here, it's only been slightly breachable. What I mean by stepping, but just to remind me, here's my steps. I like to see steps. Okay, so with the ability to manage up to 20 tables of 30 symbols each, you might one day want to say, well, I've got 20 tables loaded up. What's my best relative strength stock, or top 5 relative strength performing stock or symbol versus my base? And this is what we have Maya for. This might take a bit of a while to load up because it's got to go through 20 tables of 30 symbols. And if I just sort of say, okay, give me the big kahuna, what are the top ones that I'm watching are in charge in relative strength terms? As I said, you have 20 tables of relative strength. You might be loading up one for the Dow Jones, Dow Transports, Industry. You might have one for high-flying tech stocks, Apple, Netflix, LinkedIn. Then you might have one for the dogs of the Dow. You might have one for selling option premium. You might have one for gold stocks. And you might have something else for new technologies, and I can't imagine else. Maybe energy, of course. Okay, for here I have all the data from 20 tables loaded up, and calculate the best performing relative strength, or to see who is the outstanding one. Okay, because we have such a large amount of data, it goes all the way down to, oh my god, here we go. I've got 166 ratios loaded up here, relative strength. That is the stock divided by the index. 166 loaded up. And the worst one is the railroad index versus SPY. This is the RTT railroad index versus SPY. So that's not a good sign, is it? Slumping railroads. And the airline's not doing so good. Copper, yes, we understand that. Those are the worst ones. The best one of all the relative strength tests is FedEx versus the transports. Obviously, it's not the same base symbol. That's because it depends on what you've loaded up in your ratio tables. So here we've got 88.45. Oh, here's another strong one here. Look at that, 61.43. Netflix, we know about Netflix. Goldman Sachs is right up there. A big change for Goldman Sachs. Look at that, 107 to 20. So once again, this is, and obviously with the trend ranking down this, our custom trend ranking down the side here, we want to find, if you want to find the best trending stock with the worst relative strength, you'll scroll down the bottom here. Oh, there we go, and it's RTT airline index and transport. We've got a positive of 61. It's the only green one on the low end of the table, and it's got the worst relative strength. So what's going on with airlines? And you have a look at that. You look at the Wyckoff pattern, look for accumulation, look for its readiness to move, look at the risk profile. And here's another one here. It's Staples. We've had a look at that. That's pretty good. So obviously one way to look at for a buy signal is look for the strongest trending stock with the worst relative strength. Another way to do it, of course, is inversely. You go up to the top and say, find the best relative strength stock with the worst trend. So here we have got 38.73. It's in red. You have this one down here, and we want to see where the relative strength is the strongest. That means price may be changing. It may be forming a bottom and wanting to go up. This one here is RGLD, the gold stock. Okay, that's interesting. Well, we know gold stocks are basing. What's this one here? This is another gold stock. So there you go. The confirmation that, as I mentioned before, GDXJ and GDX are actually forming a base and showing some relative strength. So are some of the internal stocks. So this is how you can manage, in this particular table here, 166 or more, so a maximum of 30 symbols times 20 is, I think that's, what is that, 600, is it? 600 unique, but because if you load the same symbol, like FedEx, if you load FedEx in 5 times in each different table, it only counts it as one, and that's why we've only got 166. So if you load up 30 different symbols uniquely in 20 different tables, you're going to get 600 different ratios. But because we've got, we only look for unique symbols here, you have the ability to manage up whatever you can between 100 to 600 unique symbols. It would all turn up here. I've always found that managing relative strength and other software packages and sites was a major pain in the butt because you have to look at so many charts and tables. You'd be panning forever. Here you can see the movement and how it affects each other between 50, 60, 100 ratio symbols to see see where their action is. Anyway, folks, that's all found under the main menu alpha. It's a very powerful tool. It's part of the RTT package. Thanks for watching.